nature feeds as an input into almost every human activity, aquaculture, industrial production, energy, all these things. And right now, it's not really accounted for in any way. How do you invest a pre-seed? You have a very good idea of what success would look like. And you don't have the whole idea, you never can. But you have to be able to be like, this is kind of what that looks like. And the rest of it is very much person driven.
Yesterday in a panel, you said that sometimes you go and meet their family. Is that one way of doing it?
Absolutely. I have been known to do that, but I don't go out of my way and do it on purpose. But if the opportunity presents itself, I would love to know what your parents have observed.
Jahed, welcome to the show. Pleasure to have you. Thank you to Norscan for having us in their beautiful office that you can see around us. Today, I'd love to dive into a few different topics. I'd love to dive into why investing in nature unlocks new assets, what investing in nature really means, actually, because I think that's something we need to cover. I'm curious to hear your take on AI for the physical world, to talk about food, agriculture, ecosystem. Would love to hear your take on returning a 10 million fund as well. Like, how do you see the economics of a pre-seed fund? And the last thing I would love to touch on is how to be contrarian in climate. Obviously, you have your pre-seed fund, so you're very different to others, and you're trying to really push a thesis into the market. So, does that sound like a good agenda to you?
Yeah, sounds good. Especially the contrarian part. We have some ideas.
Well, look, let's start with this. What do we mean by nature investing or investing into nature? What's the story there?
Yeah, absolutely. So I think for us, it really started about 5 years ago. There's me and Matthew Stotts, the two GPs in the fund. We met through a mutual investment in a very interesting company called Regen Network. Regen Network had basically been started by a bunch of regenerative farmers, folks who had been for at least a decade and a half very much involved in the permaculture movement and in environmental stewardship, things like that. And they saw an opportunity really on bringing people together. Bringing people together sounds very hippy dippy nonsense, but I mean, very distinct stakeholder groups when we talk about nature, right? So people who are stewarding the environment, whether they own the land or not. So sometimes that's indigenous people, right? People who are developing projects, scientists who are developing methodologies, uh, financial institutions, corporations, people who are investing in these things. And then what they felt was a kind of the missing layer was a technology and legal framework around doing this stuff. And when you're doing it in the voluntary market, there isn't really that much of a legal framework, right? So, but anyway, we saw these guys come together. They were really good at convening these groups and getting folks to launch scientifically valid methodologies for valuing environmental assets, right? So nature is like the big hippy dippy nature bucket, right? But when you turn to talking about assets, environmental assets, assets that come from the environment that are linked to sort of outcomes in the environment that people are putting money against.
And that on that one, you mean forests, you mean land, you
Yep.
mean water use.
Water, exactly. Anything you think renewable energy even kind of fits the bucket there because you're basically using the sun to generate energy, and you're going to need to prove that you did that, and you're going to need to sell that energy from the sun to people. And at every layer, there's some kind of framework that says like, how much did you originate? Where did you originate? There are even frameworks around that. And, in Europe, there's a guarantee of origin, the GO. In the US, there's the REC. Other places in the world, there's the REC as well, the renewable energy credit. But all of those have a location tied to them. Right. So, but yeah, we noticed some really interesting things happening with Regen, right? So the interesting thing that caught our attention was they had originated their own grasslands carbon methodology. And then Microsoft, before Microsoft was putting a ton of money into this stuff, I think they committed to buy, and we can find this for your show notes, I think, but it's public, but they committed to buy something like 5 million credits, right? And we were like, this was 2020. So we were like, what's going on here? That's very strange. How much money is that? Okay, that's pretty nuts. Let's dig into this, right? We were both kind of involved in the protocol. And we're like, is this a harbinger of something bigger? Or is it just a kind of one-off thing? And so that's when I really started to think about like, how do you turn things in the natural world into assets? And we thought about a lot of things here before I get to your, I'm not going to answer this question in a roundabout way, but a lot of things come up, right? People are like, well, like, are you trying to financialize nature? And we thought through these things a lot. And our current stance, and I think it's shared by a couple other folks, but it's really that nature feeds as an input into almost every human activity, aquaculture, industry, industrial production, everything you think, energy, all these things. And right now, it's not really accounted for in any way. It's only accounted for in terms of like we treat it as an infinite resource that you can just feed into
Mm,
stuff. So when we think about natural assets, we're thinking of those inputs. Can we quantify them? Can we think about the risk of not having them?
mm,
Insurance, things like that. There's all these various ways of thinking about investing in nature, but we're very much focused on computation has arrived at a point where it's plausible to begin to monitor these assets, think about the complexity and interplay between them, and then how they link up to human activity and things like supply chains. And then with all that thinking, be like, hey, what are the products, companies that can actually begin to turn those, I hate that there's no good term for this. Assetize, I've heard. Tokenize makes you think of Web3 stuff too much, right?
yeah.
Doesn't have anything to do with that. But just a way to begin to say, what is the ecological state of this thing? If we want to put money toward changing that ecological state towards something that we think is nature positive or better in some way that we can measure, let's do that. That's kind of the idea of investing in nature.
Is that mainly a risk management play? Is that how we make money in nature? Is by managing the risk for the companies in terms of like insurance, as you said, supply chain risk, not having access to the resources anymore? Like, is that really what we're talking about, or is there another way of making money by investing into nature?
I think there are other ways, but currently that you have to get a foothold somewhere. So a lot of the things that we're doing currently are intersecting with insurance, with supply chains, because in the last 5 years, people have really woken up to, hmm, wildfires due to lightning, due to higher temperatures that cause more lightning in my tier two, tier three suppliers are posing big risks to my supply chain. I should probably figure something out here. Right. So that's been a great place to start. But I do think we do have a longer term view on this for sure, because we've made some investments here that are starting to sort of pay off. And the one that's very public is Earth Bank. They're on the SIFT at 250. They're growing very well. Like,
Let's talk about that because Earthbank, as you said, is quite famous by now. They're listed on main like traditional medias as well. Um, I think it's a great example of showing how to make money in nature because I think the last only statistic I've seen was like a 400% growth year on year for like 2 years in a row or something like that. I think from what I've seen, they are like roughly like 150 employees or something like that. So
half there
half
of 75. But yeah, yeah, yeah,
75
yeah,
employees, right? So like,
yeah.
so they're growing, and if they, I mean, although they didn't share any numbers as far as how much revenue they do, if they employ 75 people, you can quickly do the math on how much money they make, right?
Pretty
So,
much.
um, what about that example? Who do they sell to?
Hmm.
What is the product? Who do they sell to? Who are their customers? And what is the pain point that they're solving for?
Absolutely. I can't speak to the numbers, but I can tell you the pain points. I can tell you the products. I can tell you what people are paying for. Um, they have when we met this team originally, they were doing a play to basically use software in an agnostic way to help the entire ecosystem monitor, track, originate environmental assets. And they were going to also do a fintech play where you could use that data to underwrite things. So you could think of it as, in a lot of ways, they're trying to almost be the like Goldman Sachs of the space and empower all the financial folks to come in and finally see this data, build a new economy around underwriting assets here. But then they realized, this is a team that has about 20 years experience in land restoration projects. And so they were like, wait, this is a bit difficult because everyone we encounter doesn't have as much experience doing what we do, and everything is so bespoke, and we can't really, it's difficult to build a lot of scalable, extensible
Mm.
software in the space. Why don't we take what we've built, use our own experience, and build way basically a verticalized nature restoration company that owns as much as it can everything from the top, from the bottom to the top, right? So when you look at today with project development companies, you have, there's a number of them. There's also upstarts, but the space has been around for about 25 years. I pretty much since the Paris Agreement, in the mid 2000s. So like what that means is what they do is basically there's a physical part to what they do. You have to be in the physical world to do this. You have seed banks, you have tree nurseries, you have uh, data management across all of those. You can either build or buy that. Um, and what if you're going to start this today in the mid 2000s and the mid 2000s and the 2010s, the way people were doing this was they were basically most of this work is done through NGOs, right? And
Mm.
to be clear, I'm not picking on any of these people, right? They are doing amazing work. They're sometimes the only people doing this work in the geos they are in. The work being restoring a mangrove so that their community is not washed away by a tsunami, right? Things like that. However, if you had the opportunity to think of this as a technology company, how would you do it? You would really want to have integration of data across all interfaces of the business. You would love to know who was the last person or entity to touch this piece of land? What did they do to it? What did they plant? What did they fertilize? What were the things done to it? So that you can really internalize the total cost of ownership of a
Mm.
project. That's a very difficult thing to do. They've basically done that in a lot of the places they operate. And that enables them to really drive the cost of planting a tree almost 10x lower than what their competitors can do. And that's a very big cost savings. You go on the market and you go, how much does it cost to plant a tree? And NGOs tell you $2. $2 a tree. You're like, well, that's a great price. Then you think about how many trees need to be planted in some places and the numbers you hear from folks like Thomas Crowther and the folks that like Restore and all these other places, big numbers, right?
And who pays for planting trees? I mean, it's maybe a trivial question, but
Mhm.
like, uh, if I'm a big company, why would I just want to buy a land and plant trees? I mean, obviously, it's great for the planet. You might have a carbon credit aspect of it, but is that the main reason why people do it?
No, definitely not. It is one of them for sure. But I think that going a little bit backward to when we talked about risk, right? Like that's a thing that people realize that if there's less arable, complex ecosystems around, it's difficult to do business in a number of ways. And so one of those I like to talk about because it was a thesis that sort of originated within our thinking about 4 years ago in 2021 was that the natural world is responsible for a lot of things we don't give it credit for. Like, for instance, one of the ones that I think a lot of people know about is you obviously do your own laundry, Hugo, right?
Mm, of course.
Yeah. So in the last 50 years or so, we've l- we've adopted a lot of the formulations using your everyday detergents actually are coming from chemical engineering processes that are mimicking enzymes found in nature that are doing things to basically emulsify and remove stuff or get things in past the fatty
Mm.
membrane or not. And finding those compounds has generated a lot of business for a lot of industries. There's, like I mentioned, there's detergents, pharmaceuticals, right? So being able to, there's a lot of promise from AI in pharmaceuticals, but to date, you still need living ecosystems in a lot of ways to generate ideas for small molecules, for testing, for generating potential products that might save, lives. That's an area where we've seen pharmaceuticals actually come in and say, probably need a budget to dedicate to this. And, that was interesting to see happen in
Mm.
Earthbank. Their biggest customer is AstraZeneca. That's public. You can kind of look it up.
And so the rationale for AstraZeneca is basically to say we need input from nature to build new molecules. Is that what it is? So basically, they want to have, I'll simplify it, plants that they can use to create new medicals. That's the way it works.
It's a few steps removed, but that's, AZ sustainability. When you look at what they're investing in, you can pretty much surmise that living, standing, thriving ecosystems are a are kind of necessary for generating concepts, ideas, things from far removed from product development, but still necessary as inputs, things to learn on, right?
Mm.
And so they have, that they're one example, but this $500 million budget they've committed to this. Not all to Earth Bank, it's to a bunch of folks, but there are many other examples. But the other area that I think is really interesting is water, water risk. So we're seeing this happen in two ways when you think about investing in nature. One is for the last 2 or 3 years, we've really been looking at the data center space, not because we're going to suddenly turn into a $500 million infrastructure fund. Sorry, surprise for all any LPs listening. No, that's not why. Um, the data center space is very water hungry
Mhm.
for cooling and a number of other applications.
Tell me about it. I used to work for Microsoft.
Yeah, that's right. I remember that. And so water risk is an area about 3 years ago that we kind of looked at and said, that's interesting. We should watch that. We should try to understand what the impacts are, what the opportunities are. And, I don't necessarily think we were ahead of the curve there. There are plenty of other folks like Convective Capital and Burnt Island Ventures who are doing really good work there. And we've co-invested with some of them, actually both of them. But what we think is interesting on the nature angle is the restoration of ecosystems is directly tied to water catchment and lowering water risk, right? So it's no surprise to me years later that the growth of the Microsoft's budget of it's a small team. You worked there, but it's a small team. It's like 15 people, right? Right. I remember
Mm.
there's Annie Guo, and that's divided into 3 teams within. It's like energy, and there's a nuclear energy and a nature based person. I think and it's a small team, but I'm not surprised that they're putting so much money into it because they realize you need thriving ecosystems
Mm.
around these places in order to be able to do the capital investment necessary to drive the company to the next stage of whatever they're trying to achieve,
Yeah.
whether it's AGI or something else.
um, I'm curious on how you got into this, right? Because one of the things which is interesting is I think you have, if I remember correctly, you have a machine learning engineering background. It's not obvious to me that you would go from machine learning in the age of AI, where you could make a ton of money in AI, to actually doing nature investing, and also what's the relationship, I guess, between AI and nature investing.
Absolutely. So, well, one, um, I don't have a formal academic background. The physics is my background. So before anyone comes to skewer me in the comments, right? No, basically, I've been lucky enough to work as a product person for like a little over a decade with a lot of very smart machine learning scientists and AI research engineers and mathematicians, and to help them ship products and get to see like how does that data feed into task specific or general algorithms that then produce some kind of value in the world. But usually it started with obviously business value, right? And I was doing, years ago, I met up with two co-founders, one from Google, the other one was at Microsoft. Actually, he was a PhD in computer science, taught me a ton. Mohammed Ahmed, great guy. But it was with them that we really, this was 2017, where we were like, hey, let's apply what's happening with the adoption of Kubernetes cloud infrastructure. Let's apply machine learning to that. There's a huge data trail. You could probably train something to figure out like how to optimize the setup for something relatively simple like cloud infrastructure. When I say relatively simple, I'm comparing it to things like a forest. That's a way more complex problem. Like if you were trying to optimize the optimization problem, that is extremely hard to define, right? So we thought, hey, people want to save money, people want to have uptime, people want to know what their security threats are. Observability with data that's coming up, we can kind of get ahead of that. Now, where this kind of intersected with nature, honestly, I would tell you it's not necessarily specifically nature. What we thought was interesting, Matthew, we thought was interesting was that there is a lot of data out there, and there isn't really a business model or a way to get it that makes sense yet. This was like 3 or 4 years ago, right? And so we were like, well, that's kind of a classic startup problem, right? Like, there's like, what is the business model? Is like a classic startup problem. And if there are people thinking about this, we want to find them. We want to find the best who are thinking of this problem. And we want to begin to understand what is the space of that problem. How widespread across industries is it? So, like, to give you an example, not nature, but a place we are looking at where we have one or two investments is in industry. And so steel is a good example. Gigantic carbon footprint. When you begin to talk to the folks who are at these places, whether it's like Reliance, US Steel, if you're lucky enough to interview a customer or get access to their facilities, they'll tell you like, hey, we have a lot of data, right? The blast furnaces, the things that operate in this space, they spew out a lot of stuff, but we don't have a team of 50 data scientists looking at this stuff. And so for us, we thought that was an interesting problem to come back around to your question, where you could be like, well, ETL from bots from machine learning is at a point post 2022 where you could really just set, whether you have a small language model or not even a language model, just something built on top of a transformer architecture that can be shown, hey, this is what the outcome is, apply RL here, make it understand what a data analyst would do with data. This becomes pretty scalable for companies now of like 2 or 3 teams to deploy and make sense of data without having to have someone on the team or hiring someone to come and do it. And if you can build the relationship with those businesses, get inside the walls, you can begin to find efficiencies here. And so we think that is super interesting because that is true. If you look at I really don't like doing this, but I'm going to name drop McKinsey. They put out some good stuff sometimes, but one of the things a few years ago, they do this almost every year, is they go, what is the penetration of digital transformation, one of those nice buzzwords, in each industry? And you can almost invert that and go, those are the places that Cerulean is focusing on. It's like food and ag, the lowest, right? Niche manufacturing, second lowest. Uh, Supply chains, getting there, right? But all of those, when you really break them down, what do they point to? Where does iron come from? where do minerals
Yeah.
come from? Where is, right? So that's really where the thesis began
Mm.
to come together.
What's interesting there as well is if you plot on that same graph the carbon emissions, then all of a sudden you're like, oh, we have a problem. Like those industries are the one that are emitting a lot more like CO2. I think it's probably like 20, like roughly like a quarter for food and ag, quarter for steel and iron and everything, right? So, and it also
Bingo.
reminds me of the same problem for the grid, right? Which is like grid operators have shit ton of data, but they don't know what to do with it. So we need startups to come in with the technology and help them out. Same problem.
I almost feel like you're just predicting all the sectors in my first fund portfolio right there.
um, one of the things I'd be curious to hear your take on is when we think about applying AI to some of those climate problems, so be it steel, be it the grid, be it food and ag, it's AI that applies to the real world, and it's very different when we think about that, right? Because like if you have just an AI SaaS that goes onto the CRM data, that's quite easy. Actually, I wouldn't say it's easy because I don't have the capabilities of doing it, but it's just data that's already digital. Now you're going into a world where you have a physical world, you need to extract data from it and then play with it. Do you think that adds a layer for startups of complexity, but also maybe on the other side, an opportunity to actually be a bit more defensible amongst other startups, right?
Exactly. And I think that's a very keen point because the types of people that we're backing to do this stuff are, for example, we have a company in London called Epoch, and the CTO of Epoch is a PhD in Earth observation, specializing in soil carbon. Now, I'm sure his parents were like, "What are you gonna do with this?" Right? But it soil carbon may not fit exactly with with the setup that you had there. I say that because there are actually pretty good public data sets on soil carbon, at least in Europe. In Europe, there's Open GeoHub, which is maintained by a professor at the University of Wageningen, Dr. Iksani Wheeler. Shout out to her. She's
Mhm.
great. But these types of open source data sets, though, are still still not quite good enough for what you're trying to build if you're trying to do business. And that's not a slight on her and her team. They're not doing it for that reason.
Hmm.
They and others have an opportunity to do that, but you need to be looking at the temporality of that data, right? And so, this absolutely is, to go back to your original point, an opportunity for defensibility, because that's your opportunity to begin to make those linkages between public data sets, whether they're from space or whether they're coming in at, every 2 or 3 years for some of these things where they just go out in the field and
Hmm.
take a measurement. That's your opportunity as a founder to be like, that public private data harmonization is not going to happen on its own.
Yeah.
Right. And then that's the opportunity. So if you can get that data and you can begin to make those linkages and get to business value and value for nature, you're golden.
So that means that if we think about how to invest in the space, one of the criteria is how much of an access do you have to the big players and to their data, right? Like, because if we think, let's take the example of the grid. For the grid, if you want to do anything about it, the main key criteria for me would be: do you know the people that are working there? Will they give you access to their data? And if yes, then you have a business. Otherwise, you basically like you're flying blind.
Absolutely. And as an investor, that's definitely going to be a part of what you do. I actually think it's a two-way street, right? Like, it's not just us evaluating whether a founder can get into the places they need to be. If you want to be, as a fund manager, in the best deals, you also need to help them do it,
Mm.
right? You need to earn the right to be on that cap table by showing them some kind of value. And oftentimes for us, it's been, well, let's get you in with, I unfortunately can't name too many names here, but in the grid space, do the math. There aren't that many in the US, right? So being able to be the type of person come and be like, yeah, we can help you with this big name or that big name or that utility or that, whatever. That's one step removed from interacting with that. Let's get you in there. Let's see what you can do. And we're, of course, looking at what they've done and be like, okay, this isn't going to waste anyone's time, right? But I think that's really, it's a kind of a two-way street, right? You absolutely want to see the ability to be scrappy and execute and get into a place that you have no right to be in, right?
Yeah,
We're like, okay, that's amazing. How do they do that? But then you're also going to be like, great. And now let's get you to that next level, right? And otherwise, you're just money.
for sure. Um, when I look around, so we were at the North Carolina Impact Week. If you talk to people around us, there are not that many people that invest in nature specifically. Um, and if you go a few stages ahead of you, which is like, seed, series A, series B, blah, 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 then there are less and less people. So you're a bit ahead of the curve there. Um, if we think about the venture capital, like I put my venture capital hat, um, is that the way to run a pre-seed firm? Is that the way to run a pre-seed firm? Is basically to do something that people later are not doing yet, but you will convince them that they are great companies to take from your portfolio.
Yeah, I think that's a great question. And I've had LPs ask me this before too. And I'm like, yeah, absolutely. Because I think we're, despite working with a lot of impact focused LPs, and with a lot of impact focused co investors, some of whom are actually impact funds by Article 9 or by their
Mm,
concessionary returns. We are not that. So we're not an Article 9 fund. We're not concessionary. Our thing is very much as a GP is we need to find companies that can grow as fast as nature and climate need them to grow.
mm,
Right. And so that means that we absolutely want to see either large specialist funds or generalist funds who are just like, this is a wonderful business, come in, right, and help take companies to the next stage. And luckily, we're kind of seeing, I can mention at least the ones that are public, right? Like yesterday at Impact Week, I did a session on ocean data, the dark data gaps, very similar to the ones we were talking about
mhm,
between like nice public data sets. Private industry is a total black hole, not total, but relative, and the opportunity for AI to fill in those gaps. And one of those gaps is a company called Legend AI. Legend is basically building geographic embeddings on top of the millions of satellite images you get per
Mm.
day around of the Earth per day. It's about, I think it's 4 million per day now. But this is a great example because they are a super strong team. They've built in the space for one of the founders, Dan Hammer, has been in it for 15 years, right? In geospatial. And then they had, we did the pre-seed last year, and then they had this nice big splashy TechCrunch article came out in July called, Legend AI is building ChatGPT for Earth, right? And
Mm.
that's when they announced that Javelin Venture Partners, which is a generalist fund in the U.S. that's backed a few unicorns, led their round. Participation from ANU in Germany and folks, a couple others, but like that's a pretty good mix right there, right?
Mm.
Like it takes time for those people to be like, hey, that little pre-seed fund isn't crazy, right? But like we had known Dan for years, right? And we were lucky enough to be one of the first calls when they started to think about how they wanted to commercialize what they'd built.
Do you think the fact that you play in AI and software in general, applied to nature specifically, but still AI and software as a technology, do you think that will bring more generalists with you rather than if we compare to the climate hardware, for example, where generalists are quite often afraid of like investing in your like big factories or big plants or whatever that is, right?
That's actually a really good question.
Yeah.
I do think it will because it will and won't because where I think the uncertainty lies is that the business models and the ability to financially model an AI business, whether it's in this space or not, is an evolving thing right now, right? So like I'll step outside of our little space for a second and point to other AI companies. There's been companies like Cursor, Lovable, um, Granola, and a couple others who are just seeing crazy growth curves. But I think that as a space, we're still getting used to how to underwrite those businesses because the reality is we don't know the churn and a couple other key metrics, for net MR retention, all these things were used to apply to underwriting SaaS businesses in the last 15 years. Those are evolving. So like there have already been some, unfortunately, already have been some companies out there. I think 10x was one of them. I don't remember, but we can throw that in the show notes potentially. But where people looked at a growth curve and they looked at at 6 months churn, 3 month churn, like, oh, this is great. This is kind of looking like what I saw last time. Didn't turn out that way, right? People have had their hands burned already on this type of stuff. So I do think, yes, in some ways, yes. Like when you don't have to grapple with the deeper problem of how do I underwrite this thing, that first of its kind thing, right? That's
Mm.
tough, right? Like, and we have a bit of exposure to that, things like Earthbank. We're helping people figure out the right capital stack, the right capital partners to come in, the right data to finance debt, to finance these things. But no, I think in AI, it's still evolving, but in some ways you can also point to it and say, like, look at that growth curve, look at the stickiness of these customers. Those are the two things that I think really matter. If you're underwriting something at Series A and beyond, and as long as you can get to some kind of predictability around that, then that point applies. Generalists and others can
Mm.
come in and underwrite it more easily.
And is that space is a space where you invest crowded with startups? Because if we think about, as you said, Lovable, for example, I think there are probably hundreds of startups that are trying to develop the same infrastructure to build websites and applications through language, basically, right? But where my head is going to is when we connect it to the physical world, all of a sudden there is a big barrier, which is you have to get out of your PC and then in the food land or whatever that is, to go and talk to farmers, to go and talk to these people, and then figure out, okay, how can I add value there? So would you say your space is super crowded, or actually is it concentrated in a few important bets, that could explode later?
Speaking to the space, I do think it is getting very crowded.
Hmm.
So, like, in general, yes. And then if I get into the few of the buckets that we focus on, still yes, right? Like, do you look at the number of grid in Europe, especially the number of grid startups that are doing something with software in the grid? Huge, right? And there are at least 6 or 7 areas of that value chain where a startup is either trying to isolate it so they can build something vertical, first and then go horizontal, or they're just like, "I'm gonna own this niche," right? There's actually, I would say, I don't know if I'd call them success stories, but there are folks who are growing in that space. Gridlayer, a couple others who are like, "Oh, yeah, I've just raised a Series A in 18 months. I'm going places," right? But yeah, no, the competition, I think you really have to ask yourself as a VC, if you're not seeing a lot of competition for your deals, you have to have a very good answer for why.
Mm.
'Cause
Yes, for sure. Well, look, another section I'd love to talk about briefly is on the economics of of a pre-seed fund. One of the thing that maybe to start with, before talking about the economics, uh, teach me in 2 minutes how to invest in pre-seed companies when you have to throw 200K, 500K to a company that doesn't have a product, no revenue, and just a thesis.
absolutely. So I think, like, you're you're lucky enough to, we can step back a little bit and say, how did you get in front of that person, right? Usually, we're not just getting them from the form on our website. Sorry to everyone who's submitting to that form. I
Have
do
you
look at everything.
have you ever invested in a company that came through the form?
No.
That is a consistent story with across VC in general, unfortunately.
It is. I do look at every single one, so that absolutely yes. And we have talked to a few for sure, but no. It's not a slight upon you. It's just like, we a lot of the thing that we're where I was going with this too is that you also have to have in your mind the shape or the idea of, like, if there is this particular thing that we think needs to exist because it ties to a very big outcome and big impact, what does that shape look like in a person and a team,
Mm.
right? And you have to, and this speaks directly to your pre-seed point, to how you do this. You have to be looking for these people proactively. You can't just be, you just hope to run into them at a conference. Right? Like, and so that's very much a part of it, is that when you're thinking of, like, how do you invest a pre-seed, you have a very good idea of why already, what success would look like. And you don't have the whole idea, you never can, but you have to be able to be like, this is kind of what that looks like, right?
Mm.
And the rest of it is very much person driven, right? I know everyone says people, founders, everything, right? But, like, I mean, we've actually computed this to a certain extent because we have 40 companies in the first portfolio, and we both have like a 30 company or more ish angel portfolio before we started doing this. We asked ourselves, like, how long do we know a founder before we make a decision? And the answer was a little bit surprising for us. It was oftentimes more than 6 months, right? We might encounter you because you're fundraising, but we're usually not going to be FOMOed into participating in your round, because that's just not the way that you're going to return a fund. Because it's a very tight rope to walk. The ones that are trying to FOMO you have to kind of be like, is there something real here? And are they really going to be that big? And sometimes, few times, we have said, great, we'll overpay for this. Right? Like, because realistically, if it is a deal that you have conviction in, you get as much of it as you can.
Mm.
Right? Like, and it may actually, even the smallest check that you could get in there could still potentially be huge. Right? You have to just, that's a gut decision. But going back to the people, you have to, you have to have an opinion on how this person is going to respond to adversity. You have to have some evidence. You have to be, you have to understand who they are. Why are they doing this? Why are they fit for it? Right. And I don't even mean the first idea. It could change a couple of times, but, like, are they going to stick with it is one of the biggest things. And if you're deploying the money at pre-seed, that's sometimes the biggest one.
Yeah, yesterday in a panel, you said that sometimes you go and meet their family. Is that one way of doing it?
Absolutely. I will, absolutely. I have been known to do that, but I don't go out of my way and do it on purpose. But if the opportunity presents itself, I would love to know, what your parents have observed of you, right? Because I'm looking for those things, like, that are kind of tied to my own weird background, right? Like, my parents are immigrants from Afghanistan to the United States 4 wars ago, the Soviet-Afghan War. I never saw any of that adversity. I grew up in the US, but I grew up dirt poor. And, I did a bunch of other things that you'd be like, well, how did you end up getting the right to do that? Right. I want to see,
Hmm.
that's what I want to see. Right.
Yeah. Um, if we go back to the idea of you have to understand if, to quote you, like if it's the way it should be working. So I guess, do you actually proactively build thesis on different markets where you're like, grid, the grid should work that way, it should be flexible, it should, whatever that is, software should be on top of it. So I'm going to be looking for startups in that space, or is it the other way around? People come to you and then you start looking into the market.
It's definitely not one or the other, but both happen all the
Mm,
time. You
mm,
take note, you begin to take notice, right, of like some of the people who are finding you and some of the people who even your LPs are telling you to pay attention to. It's
mm,
pretty interesting. Like, this is not every LP, but we have a few um, who are just really in it. And like, one of them in particular, I don't want to name him because he's well known, but like I've consistently surprised by seeing his name on cap tables where we've been in things together at the same stage, and I'm like, how did he find that first? My
mm.
goodness, right? But like, but yeah, that there's an interplay, right? Because you're, of course, you've got your, you're out to the market, you're learning what people think are interesting problems, and what your version of the best founders is doing. But then at the same time, you definitely want to come in with something, of an idea of which markets are more amenable
Mm,
to this type of disruption. What shape is that going to take? I keep it pretty abstract, though, as you can tell, because I don't think you can build that much confidence in what
mm,
shapes, how it's exactly going to look, but the shape roughly that it'll take, you know, the applications in, say, energy and food and ag, and oceans, which we talked about yesterday, and things like those are things where you can look at it and say, like, yeah, there's 4 million satellite images taken per day. SpaceX is booked out for like 4 years for satellite launches. Like, this is going to be very big. And then the fact that everyone has this big gaping hole in their supply chains, or illegal fishing, or uh, shipping emissions, and all these other things, that seems like something that someone's going to come along and connect, right? And so we definitely do both.
makes sense. Um, You said something interesting. You said sometimes you are happy to overpay if the deal is very interesting. Uh, in 2025, what does that mean when we're overpaying a deal? Like, what's the range of valuation that you look at pre-seed usually?
Absolutely. I think you have, it varies across sectors so much, right? If you look at the sectors that are super hot right now, like outside of climate, I mean, if you hear a manager say they're happy to overpay there, it's oof. That's a big red flag for you, my friend, right? Because that means you're getting into stuff at the lowest, like 80 million post money, and maybe you got into it 200, and you're like, oh wow, that's great. But for pre-seed, it really depends. There's so much variance, but I'd say I'll break it down in a few ways. Pre-seed in the United States, if you're like us, you're typically going to be finding a first-time founder that you have conviction in, that you want to very much have a big piece of, and you want to be the first believer. And when you do that, you can see valuations in the range of 7 million post money, 12 million post money, something like that. 7 rarely, 10 to 12 more. 8, yeah, we have a few of those. But in Europe, you'll see like you could get as low as 5 million euros, 4 million euros sometimes post money for first time. If you're dealing with a repeat founder, you might want to bump that up to 10 million euros post money. United States repeat founder 15,
Yeah.
depends on how good they were, right? Africa, LATAM, cut those numbers in half,
Mm.
right? For first money in. And yeah, I think that's about what you see
Yeah.
in the range of pre-seed. But I do think that when I say happy to overpay, I mean no one's happy, but but they are happy to get allocation in a good deal, and a deal that they think is good, and a deal that they think is good independent of how hot it is, right?
Mm.
We're not going to be in something because we get to co-invest with Sequoia. We if we want to survive, we have to be the ones that have found it first. So that has happened in the past where it's like a very hot deal and like, oh, you want to co-invest with Corey at 25 million posts? I'm like, I don't know. If you're trying to FOMO me and close in 5 days, it's just not like we're patient.
That makes sense. Yeah. Also, you're going to be in the game with them for 10, 12 years. So, like, if that relationship starts with FOMO,
Yes.
that's difficult. Okay. Well, look, one last section before we close this episode, but just want to understand, um, as a pre-seed fund, as I said, like you probably have to be a bit different, otherwise it's a bit difficult, and to have a specific thesis and a view of the world. When you go to LPs at pre-seed, what does that conversation looks like? Are they receptive, I guess, to like something completely new and a bit scary, or like do they want to see signal of similarities to other stuff they've seen before?
It really depends on which subset you speak to,
Mm,
right? I think our there are there's such a universe of preferences, right? But I think I can speak to a few of them. There are people who want to see certain impact in the world, and if that impact includes nature, oceans, if we're typically a good fit and we have a good conversations with those folks, even if it's very, very early, they're like, whoa, that's like the earliest I've ever seen. They're but I also think it's important to share learnings here, right?
mm,
Like a lot of the time, you'll be able to maximize your impact by looking at the private markets because the public equities and other ways you could have impact, it's hard for you to either through governance or just being a smaller check, it's hard to move those,
mm,
right? And ESG was marketed as the way to do that. And it's, jury's out on if that's that effective, right? Because, but for us, going back to your original question, right? Like the getting when we engage LPs in the space, it's really interesting. They can educate us on certain things. Like we have a family that has a multi-generational coffee farm in Tanzania, right? It's a Kenyan Indian family, and they have been they have been trying for generations all kinds of innovations to address the loss of bees for pollination, water, drought to their lands, things like this. And so when we engage those folks, there's an opportunity for them to teach us and for us to
mm,
teach them, and that plays really well, right? It doesn't matter what stage it is, and of course, if the family has a footprint in technology and they understand how this investing works, even better, right? But overall, like it is pretty difficult to go out and sell pre-seed to people for sure. But I also think it's the place where our edge is. So we
mm,
can't be inauthentic, right? I mean, we've been in existence for, legally as an entity 3.5 years, 4.5 years longer as an idea and piecing and warehousing things together. And the thing we strive for is, delivering returns, achieving impact, and doing it in an authentic way. Because we would have had like, I can tell you multiple opportunities to be like, now we're going to do we're going to do Series A. It seems like people are buying that. And I actually would tell you right now, a lot of the conversations we have across the board with all types of LPs are, oh, we were a bit overcommitted to stuff at early stage in climate. We're looking at growth stage. We're looking at growth stage. We're looking at project finance growth stage. So like, again, I could switch that around and say, great, that's what I'm doing. Right?
yeah.
But no, like you have to stick with it. You have to be authentic. You have to be authentic in the things that you think you can bring into the world.
Mm. And it's also for them, purely from a financial perspective, it's a way to increase the risks they take, and also probably the return as well. Because I think like as a pre-seed firm, obviously I don't know how much you're selling, but likely like a 3x. But then equally, like you probably see some pre-seed firms that completely like double that or triple that, right? Which is also one of the way of doing it.
Yeah, exactly. And I think like, you know, we, I can't get into the specific things because then I would definitely have a lawyer visit me. But yeah, you could surmise from what we've said, market rate return for a pre-seed fund and consider it generalist, it's pretty aggressive, but that's mostly because it's tied to where we think that if you truly think that software, or not even just software, just if you truly think machine learning is going to change every industry, that's a
Yeah.
pretty big opportunity, right?
Well, Jahed, it's been a pleasure. Um, Before we go, there's a couple of questions for you. The first one is, if someone wants to reach out and not through the form, what's the best way to find you?
That's fantastic. I think, well, I'm on LinkedIn. I don't use any other social media, which probably says something about me, but I don't know if it's anything good. But you can find me on LinkedIn. You can find us at cerulean.vc. You can also shoot me an email at Jahed at the same domain. Um, we're very reachable, right? So if you're a founder out there who's doing something in nature data, oceans, industry, the application of AI to energy, and any of those things, find us.
Sounds good. Well, I guess listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts and Spotify. Jahed, it's been a pleasure. Thank you so much for taking the time.
Thank you, Hugo, for doing this.